Hello everyone. We have entered a new month with some good news on commodities front as US dollar is showing some signs of correction. Commodities witnessed good rebound last week amid the softer US dollar and easing treasury yields. To understand whether the positive momentum in commodities will continue in the upcoming week, I Ravindra Rao from Kotak Securities Commodity Desk will take you to this weekly edition of Commodity Audiocast. The audiocast will help you in understanding the possible triggers for the week and the important price levels to watch out for. Volatility continued last week as the American currency, which had touched a fresh decade high of 114.53, slipped sharply below 112 levels, while the US 10-year Treasury yield slipped below 3.7% after an unexpected bond buying announcement by Bank of England. In our last week's audiocast, we had mentioned that the week's move in a dollar would be crucial after a decisive move above 110 resistance a week earlier. Sharp fall from the highs has given some hopes of a corrective move in the American currency after its relentless rally since past few sessions. US manufacturing, US payrolls report, and FOMC member speeches will be key to dollar's move in the upcoming week. On the price action front, although US dollar index witnessed some corrective move in the week gone by, it might be supported near 110.50 to 110 zone, which is the resistance turned support. So the ideal range for the week would be 113.50 to 110.50. A weekly close above 113 would again give bulls the edge, whereas a weekly close below 110 might indicate a short-term top in a dollar index. On the precious metals front, COMEX gold managed to close with near 1% gains as softer dollar and easing treasury yields provided the much needed support to the bulls. Gold prices made a sharp recovery from 2.5 year low of $16.13 an ounce, touched earlier in the week. One positive was the inflow in SPDR gold ETF holdings that witnessed a marginal inflow on 29 September after declining for 8 consecutive sessions. Similar trend was also seen in COMEX silver, which rebounded from $18.35 per ounce to close marginally higher above $19 per ounce. Although the bullish momentum might continue in COMEX gold and silver for the upcoming sessions, traders might be should be slightly cautious ahead of the US ISM manufacturing PMI and jobs report, as this might provide some hints on the US economy and the monetary policy outlook following hawkish stance by most Fed officials. On the price action front, COMEX Gold active contract has formed a bullish piercing candlestick formation on weekly chart. However, for the pattern to confirm, it should give a weekly close above $16.97 per ounce. Till then, the possible range would be $16.50 to $16.85 per ounce. On the MCX, 49,800 should act as a good support, whereas a strong resistance is placed near 50,500 followed by 50,800 in the December contract. In case of MCX silver, price formed a bullish candlestick formation in the midweek, which was confirmed at the end of the week. Having said that, there is a high probability MCX silver might test 58,250 levels, and in fact, it might further go higher towards 59,000 in the coming sessions, provided the low of last week near 54,350 holds. Coming to energies, NYMEX WTI crude managed to close the week with near 1% gains after declining for 4 consecutive weeks. Crude was supported by surprise drawdown in US inventories, prospects of output cut at the upcoming OPEC meeting, and fears of supply disruption by Hurricane Ian. However, WTI has slipped from near $83 per barrel on Friday to close the week below $80 per barrel on reports that OPEC's oil output rose in September to 29.81 million barrels per day, which is the highest since April 2020, surpassing a pledged hike for the month. Trading might be choppy in the coming sessions as OPEC Plus meeting is due on October 5th. This will be cautiously watched for crude oil balance and industry outlook. Also, traditionally peak travel season in China during National Day holiday next week is likely to be muted as China's health authority has urged people to stay put during holidays and avoid travel out of their cities to reduce the spread of COVID-19. On the price action front, we expect WTI crude to trade between $77, which is a strong trendline support, and $85 per barrel, which is a support turned resistance. Break on either side might give a direction. On the MCX front, the trading range would be 6,400 to 6,800. This might change if there are any surprises in the OPEC Plus meet. MCX natural gas would continue to trade in the range of 540 to 600. Break on either side might give a direction. It is trading in a very broad range, so we don't expect any clear direction as of now. But yes, if it breaks this range, we might see a directional move in natural gas. Lastly, in case of base metals, the prices have traded range bound with a slightly positive bias. We had seen some recovery in the last week, and many of the base metals are showing some signs of reversal. But in the upcoming week, it might trade in a range bound manner amid China's national holiday, and traders may keenly watch developments on the LME's potential ban on Russian metal trading. On the price action front, MCX Copper has confirmed a bullish engulf on daily chart. However, bulls might have to take the price above 655 on closing to take it further higher towards 672. Why 655 is because it is the 52-day moving average, and it is taking resistance over there. And if that is taken out, we might see a good up move in prices. If they fail, then dips towards 638, 636 might attract buying. MCX has also confirmed a bullish piercing candlestick. Excuse me. MCX Zinc has also confirmed a bullish piercing candlestick formation on daily chart. So until the pattern low near 258 holds, dips might attract buying. To conclude, a global risk appetite may be limited next week as markets eye OPEC meeting, US ISM manufacturing PMI, payrolls report, and speeches by several FOMC officials. Also, worsening Russia-Ukraine situation might further add to the uncertainty on both supply and demand front. Focus would continue to be on the US dollar moves, and that might trigger fresh buying in commodities if we see further correction in the dollar index. With that, I am signing off from this edition of Weekly Commodity Update. All the best and trade safe.